9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian stocks starting off the week lower after weak economic data out of the U.S. The dollar is also trading lower as traders pare back bets for a Fed interest rate hike.
We'll be watching shares of Alibaba after reported 3 billion downloads for its family of AI models, topping its domestic and Silicon Valley rivals.
Now, new loans in China dropping by a record amount, reflecting weak household and business sentiment. Activity numbers for July are also expected to show slower factory output growth and also a steeper decline in fixed asset investment.
Plus, some big interviews coming up. We'll talk to the CFO of Chinese robotics startup LimX ahead of the World Robot Conference in Beijing. And later, the CEO of BlueScope Steel joins us after full-year earnings miss estimates. Normally, this would be a big sort of data day. You know, we would count down to, of course, what happens at home prices, and then top of the hour, we have the data dump. And but no, we got to wait another 6 hours for this activity data to come through here today. So things are a bit delayed on that front here. But all the while, it's pretty quiet overall, too.
It's quiet anyway.
Yeah.
I think one simply has to look at the benchmark. It doesn't help that you have major markets across the region, like Korea, that are shut today. Indonesia is also shut, so you're not getting a lot of volume coming through as well. But yes, they did reschedule the release of the numbers for after the markets close, including, I believe, also the home prices, which should be out at the time the markets open. That's also being pushed back to 3 p.m. today. Yeah,
and when you have what was one of the record sort of weakest print we saw in July when it comes to the credit data, that certainly does go to show what we could see in this a few hours. But then again, you know, we have all these news about AI, right? I mean, this is where this new economy side of things maybe is not reflected in the data. That's according to Global Economics here when it comes to this credit data. That it really just goes to show, you know, it's about new tech, innovation, that maybe that's why you are seeing the non-AI side of things look pretty weak.
Yeah, I mean, it's really we will talk about those two legs of the K-shaped recovery, right? You glance at the news, it's really about this K-shaped economy and recovery that we're seeing there. So equity markets are looking like this, and I think when you look at bond markets specifically, you have three big things this week. You have Fed minutes coming out midweek. You have, of course, a long-end bond auction in the Treasury markets later on in the week. And you have this resurgent bond market in China, which is now pushing to new highs. And as far as the 10-year yield there is concerned, really going the opposite way of where you are pretty much on elsewhere in the world. Now, speaking of that, a lot of earnings as well to get through as we look at the open today. Of course, earnings reaction from Friday, the likes of Zijin, for example. Geely's coming out with earnings today. Just keep that in mind. And as far as equity markets in China go, we are, of course, on a 4-day streak of weakness as far as MSCI China goes. So we're looking at things like key levels, for example, support level. I think the 100-day moving average on Hang Seng Index is in focus today. You're looking at 1.68% handle now on the 10-year yield, right? So we haven't been at these levels for about 12 months or so. So we'll talk more about this and, of course, what's been happening or not happening in the currency markets where you have an extremely, extremely tight range on dollar China recently.
Yeah, so watching very closely, right? Especially when you take a look at what's on the agenda, right? We have, of course, Fed minutes. A week ahead, we have Baba. That's going to be reporting this week as well. There's this Unitree listing that should be happening sometime this week as well. So certainly, there's going to be a lot of sort of that tech sort of theme here across all this. In terms of your agenda today, of course, we are counting down to that July activity data. The CGB rally, the yen volatility has basically collapsed as well. Z.AI, obviously, all the news that we've been getting when it comes to AI, not just with Z.AI, but also when it comes to Alibaba as well. We talked about earnings, so Zijin mining, that's certainly one thing where we'll be front and center. We're watching, you know, Kweichou Moutai and the like, and we're still in the window for some FDI data as well. But yes, let's start with the data today. Why not? Yeah.
Okay. So let's have a look at that. So as we were pointing out, it's a later than usual release on the activity numbers today. It's 3 p.m. from what we understand. The data is expected, in any case, of course, to confirm the economy did lose momentum. That's ahead, of course, of last month's Politburo meeting and stopping short of introducing new stimulus. We did get an indication of that when you look at the PMI numbers, which came through, of course, as an early indicator for the month of July. Let's bring in Min Min Lo, our China correspondent, here with us on set to give us a preview of the numbers today.
Yeah, not expected to be impressive, right? In fact, if you look at the forecast, retail sales is the only one that is expected to improve from the previous month. But even then, it's still hovering at levels that are the weakest since outside the COVID lockdown years. Everything else, whether it's industrial production, fixed asset investment, property investment, all expected to deteriorate, including surveyed jobless rate as well. So this continues to reaffirm that K-shaped recovery, right, where you have tech and tech-led exports being the main bright spots, but perhaps not enough to lift the broader economy there. Now, a part of it is perhaps seasonal because of the bad weather that we got last month, right? A couple of typhoons and floods, so that would have affected shipments, affected construction as well. But yes, overall not looking very good, especially disappointing after the Politburo meeting, which didn't also unveil any new stimulus.
The credit data that we have, how bad was it?
It was bad. So we are looking at another record slump. We're talking about borrowers repaying a net close to 600 billion yuan. So a contraction in both long-term borrowings from both corporates and households. So for households, it really means that people are not willing to take out mortgages, and this is tied to the property sector. For corporates, they're also not willing to take out new loans for investments when the economy is not doing very well, right? But bear in mind, Bloomberg Economics did say that it also reflects the structural shift in the economy towards the new tech sectors, because these are high-tech sectors that are very high growth. The banks typically are not very willing to lend to them. So most of them are raising funds through equity markets and bond markets. So that's why we are seeing a contraction in new loans. If you look at this chart here, the orange line shows aggregate financing. So that grew by 1.4 trillion yuan. It was better than expected, but the bulk of it, 1.3 out of the 1.4 trillion yuan, was government bond issuance. So that really helped to offset the contraction in outstanding loans. But again, government loans, perhaps that could show up later on in the economy when the loans are being deployed into infrastructure investments.
All right, Min Min, thank you. Our China correspondent Min Min Lo there, and what to expect out of the data here today that has been delayed. But Dave, you're looking at some of the macro picture in China. It's been pretty quiet. You talked about the vol and the renminbi, but also the CGB rally that seems to be getting a bit of traction now.
A lot of it is related to what Min Min just talked about, right? So it's been quiet, it's been stable on the China macro front. Yes, when you look at sort of the cyclical story there, and sort of the lack of push we're getting, although you are getting a push on the industrial side and exports, really coming out in as far as some of the sort of the macro charts are concerned. So one of the things I want to point out as we get underway this week is this crash in actual vol on the Chinese offshore currency. 10-year actual vol actually took out the 2022 low late last week into where we are right now. We're just extremely close to taking out the 2015 low on that. So we are nearing record lows as far as that's concerned, which then goes into the fix today and whether or not we will get some variance there. And of course, there has been a lack of variance in as far as that's concerned. The other thing we want to point out too is, and I think this is relevant to when you look at the bond markets, this headline just crossed. The Japanese 10-year bond yield, highest, I believe, and Yvonne's going to correct me if I'm wrong on this, since 1996. Everything else in China is going the opposite way, right? So you have Japanese 10-year yields. You have the 30-year bond yield in the U.S., of course, pushing towards, again, multi-year highs. And you have this bond auction on the 20-year coming out this week. And again, they got the 30-year out, but obviously at a very, very high yield. When you look at the 10-year yield in China, of course, on the back of the softness we're seeing in the data there, futures yield 1.7%. So we are currently now at 1.68 roughly on the Chinese bond yield. So we have taken out the recent low, and as you can see, we have entered, and we'll see whether or not we persist, we have entered this lower range on the Chinese 10-year yield. But just a couple of things to watch, of course, as we paint the economic picture. And as we go into the data, of course, later today, Yvonne.
Yep, and you were right? Those GGB yields, you're right.
Cool.
The highest we've seen since 1996 right now, right? So certainly that's one thing to watch when it comes to the 10-year. There is that 20-year bond auction on the U.S. this week as well. And obviously this yield steepening sort of trade seems to be gathering some more traction as well, just given what we've been hearing from those Fed rate expectations that really is kind of being recalibrated. And that's weighing really on the short end. Long end, though, you're still talking about not just the fiscal restraint, brains, but also when it comes to AI investment boom and the like, that is keeping, of course, the long end elevated as well. Coming up, I mean, we talk about not just, it's slow days, so why not talk about robots, right? We're going to begin coverage of the World Robot Conference in Beijing. LimX Dynamics, Jessie Liu is going to be joining us there discussing the company's potential listing plans and what looking to showcase at the event. And later, the head of China Industrial Tech Research at Goldman Sachs, Jacqueline joins us to talk about China's shift towards high-tech AI and robotics exports. They say global 3.0. That's the next thing to watch. We're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Monday. Futures are up this morning. Well, the World Robot Conference in Beijing starts this week amid growing investor appetite for physical AI companies. And to that point, we see the retail section, meanwhile, of Unitree's upcoming IPO in Shanghai, more than 5,000 times subscribed. Let's bring in one of the participants of this week's conference, LimX Dynamics. Our CFO, Jessie Liu, joins us. And welcome back to the program, Jessie. It's always great to have you. Tell us just about the conference itself, and really, what do you think is going to be the big sort of theme this year, and how is it different from previous years?
Yeah, it gets better every year, obviously. It's going to be very exciting this year. I can only predict, a lot of demos around open world environments, manipulation tasks operating in sort of unstructured open world environments, small living rooms, small kitchens is going to be the theme this year. It's going to be a big step up from last year where it's more structured, more sort of orchestrated, pre-rehearsed. Right, so looking forward to that. And I think something else is going to be new configurations of hardware, potentially. Hardware that's more optimized for specific use cases, specific tasks, and less sort of more generalized, the traditional humanoids that you see. Yeah.
Right. And your product lineup, how has that? So what are you looking to display? What's new from you guys, and how has that changed since the last time?
Yeah, both of those are going to be on display at our booth in Hall C of WRC.
Yes, yeah. 316.
Yeah, 316. Yes.
C31. I was told by my producer it's Hall 316. That's the plug for you. Okay, go.
Yeah. Please make sure to be there. We have, obviously, we displayed some things at WAIC in Shanghai last month. And it's going to be a lot more for WRC. Obviously, it's a more robot-focused event. So there's going to be more robotic stuff, more hardware, geeky hardware stuff, and some more stuff on our progress in our brain system, right? And our progress with new types of data, new work that we've done with sort of world action models, egocentric data. We've done a lot of work surrounding this new sort of data type. And a lot of that result is going to be on display live, which is quite important at WRC. Yeah.
There's so many startups that are kind of in this space, right? I think it's more than 300 or so right now. What do you think is the right sort of strategy to really survive in this sort of industry right now? Is it that it's not just the hardware alone? You kind of have to have that sort of AI full stack capability as well?
Yep. So whether to have it or you have to understand it first, I think, because it's not anywhere near mature, I would say. When it's mature, this is going to be one of the biggest markets, verticals in the world. It's still a small distance from being fully mature, but you have to understand the trends. You have to understand where it's headed. A lot of the most frontier stuff is still in academia. To be honest, how to bridge that gap between academia and industry is quite important for us as well. And how to bridge that gap between the brain system and the hardware itself, because that's very interconnected. The hardware is actually configured the way that's most optimized to carry out the structure of the brain system, right? So the hardware at the same time is changing. So you have to, as hardware makers, with a brain system, we have to understand both.
A lot of the focus within the industry in the last few years has been, I think one simply has to look at whether that's dancing robots, fighting robots,
running robots
in marathon, the dexterity of the hardware.
Yeah.
But how do you improve the dexterity of the brain? So what is that conversation like within the industry now?
Yeah, the dexterity of the body is something that's a solvable engineering problem. I think that's something that we've optimized to the max, almost to the max, right? You have marathon running robots, you have boxing robots. You have robots that do very extreme sort of parkour stuff. I'm not sure if you've seen those.
Yes.
So all those show kind of the dexterity. They show the endurance. They show the functionality in outside outside environments in extreme heat. The scalability of the brain system. That's methodology and data. Those two are interconnected. We're experimenting with those at a very rapid pace. Last time I was here was in April. We still don't have a lot of the new methodologies that we're using today. So it's only been 4 months, and I think our methodology has moved forward quite a bit. Is it the most finalized version of that methodology and the data type that's needed? Probably not.
Okay.
But I think we're on a more promising direction than even half a year, a quarter ago, I'd say.
Do you think that you've made enough progress to actually significantly scale up commercially now?
I think we're demonstrating some sort of we're proving that exponential potential that we usually experience with new AI waves.
Yeah.
And usually when that exponential curve isn't really speeding up, it's because we haven't found the right methods. When we're on the right track, that curve really starts boosting up. So I think we're on that curve now. So,
can I ask how many have you sold?
How many have?
How many are in current commercial operation among your clients? Yeah.
Yeah. So we've sold up until today in the thousands of units.
Okay.
And we're quite proud because those thousands of units are actually in we call real commercial scenarios.
Sure.
Yeah. Nothing to do with sort of data collection. Nothing to do with. They're in scenarios that actually help, that give value to our customers. Not a lot of work done in living rooms and households today yet, but they're doing work in commercial scenarios.
Is that the vision?
That is the vision. Yeah.
Okay, it's almost like getting the big computer into the desk of every person, as the vision was with the computer.
Exactly.
What about robot prices? I know they've gone down significantly. I think some 90% or more in the last 5 or 6 years or so. Do you think robot prices can further? I remember last time you came on, you said it's not a matter of whether we can, but whether we should lower your prices. Where do you think prices go from here?
Yeah, we still shouldn't lower our prices.
Okay.
I think we've gotten to a good point where the current price point sort of supports the product value that it offers today.
Sure.
And for our sort of configuration, it's a general purpose humanoid. The big advantage is when the brain system develops, the hardware doesn't have to change that much. Maybe a new pair of hands, maybe some new vision sensors, and that's it. It's sort of a minor update to your car. You can think of it that way. And then all the updates are actually done over the air, right? So you have this mega intelligence carrier of the future. A lot of the business models are going to be surrounding kind of how do we monetize intelligence itself. Currently, there's limited intelligence, especially limited intelligence in the open world. So we have to monetize that through the hardware.
Okay.
In the future, the intelligence itself is going to carry most of the value. So it's going to be moving towards more of like a token-based,
I see.
Business model, if we look forward that far. Right?
Okay. IPO, I think last time you were here, you mentioned that it's something that is on the radar.
Yeah.
Do you have more details on your IPO plans?
Couldn't really disclose fully, but we're in that process still.
Okay, well, how's the fundraising environment, generally speaking? Because you have a lot of companies now, as Yvonne is pointing out, right? There's hundreds of companies now. What is it like to be in this business right now, talking to investors, whether that's very early in the private stages or perhaps closer to being a public company like yourself?
Yeah. A lot of exciting newer startups we see coming up because, they're started on these new methods, this new kind of data depositories that companies like us actually help build, right? So they started on way more than we did back 4 years ago. So some of them start to show promise, 3 months, 4 months into their birth, right? So a lot of new opportunities. At the same time, I think it's still a very active fundraising environment in China. I can only speak for the Chinese scene.
Sure.
a lot of active local investors and global investors alike that start to pay attention to the Chinese tech market as business models start to form, as revenue numbers start to showing some sort of kind of stable growth, and that's where kind of a lot of the large global institutional investors, they start to pay very close attention. And we've had the luck of having a lot of global investors on our cap table as well. So.
I was going to get your take on what the U.S. did last month, right? They banned the imports of some of these foreign-made humanoid and four-legged robots. Didn't specifically target China, but obviously there's speculation that this is what it's targeting. What impact do you think these restrictions could have on the industry? And do you have any exposure to the U.S. right now?
We do have business in the U.S., and a lot of our products are FCC registered. Now, I see it as a way to protect, to see whether a robot hardware industry can actually be feasible in the U.S., right? It's a kind of feasibility study. It's a pressure test on the entire industry. Is it going to happen? I couldn't say for sure. We understand, the complexity and nuance behind actually building something as complicated as this. But I wouldn't rule out the chance of U.S. having a less mature but somewhat a full robot supply chain, 2 years, 3 years down the line. Yeah.
How far ahead is China in terms of years?
In terms of years.
Just quickly, if you could. I'm just wondering.
It's anywhere between 3 to 10, 20 years because it's not just the humanoid supply chain we're talking about, right? It's the whole automotive supply chain.
Okay. Catch Jesse out of LimX Dynamics, of course. It's, of course, WRC, of course. That's later this week. Thank you so much, by the way, sir. Have a great week ahead. Hi to the team and the industry itself. Right. Hang Seng Index up close to 1% as we get into the session today. Lots more ahead. This is Bloomberg.
All right, watching shares of Z.AI. Of course, this is also known as Zhipu. So stock is up here this morning. They're set to upgrade that flagship AI model, GLM 5.3. So it's said to be seen as one that can really rival the likes of Anthropic out there. So certainly that is helping to lift the stock here this morning. Baba, that's the one to watch as well. They also talked about their models and some update on that. The stock's up close to 2. So AI models hit 3 billion downloads, and this is certainly a milestone ahead of their earnings coming out this week. Other earnings to tell you about, you got everything in the consumer space to AI, so Sands, SenseTime, Zijin Gold, and Moutai all set to report as well. All right, watching the China show. The Open is next. This is Bloomberg.
Good morning and welcome back. You're watching the China show. There's really not a lot to talk about today. In fact, we spent the better part of the last 20 minutes talking about robots, and I guarantee you the next 30 minutes we'll spend a lot more talking about robots. There's a big conference coming up this week. It's quiet in the news front so far, I think is the point we want to make. Yeah. But I think there's lots of earnings here and there to get into, which I think will reflect at the Open today.
So, we could even talk about the data because we were expecting this big sort of data dump for July, and that activity data has now been pushed back to 3 p.m. So usually it's around these hours. So even that
we've logged off by that time anyway. So I'll look at that tomorrow.
I'm already at mom mode at 3 p.m. Yeah. But anyways, we'll talk about it tomorrow. I'm sure. Take a look at when it comes to markets here this morning, and obviously we are dealing with, of course, there's a little bit more escalation when it comes to the Iran front as well over the weekend, and really the U.S. trying to apply sort of economic pressure on Iran. So that certainly is one thing that we're contending with the Shanghai crude price there. So we're up some 3%. Onshore markets, though, are pretty slow and steady here. We're pretty much flat on the Shanghai Composite. CSI 300 is just up by about 1/10. It's interesting enough we're seeing the likes of Kweichou Moutai. We're down some 3 before those earnings come out. And then we have the likes of the consumption space like Medea. There's also slightly lower here today. Capricorn Tech, though, is catching a slight bid. Still watching copper prices. That still looks pretty elevated as well. And we're watching, of course, the CGB rally that seems to be gaining a bit more momentum here, of course, after that credit data that we saw for July. So that, for sure, we got. record slump in terms of loans last month. So certainly that's one thing to deal with as well. Hong Kong, this is what it's looking like here today. Of course, mind you, Korea, mind you, Indonesia is shut today. So maybe, volumes-wise, it's a little bit impacted. But we're watching actually 1% gains here in the city.
Oh,
Keep in mind, MSCI China, though, was down from 4 sessions here. So we are seeing a decent rebound here this morning. HS Tech is all up mostly. You see like of Alibaba, Xiaomi, they do report later on this week. Tencent's up 1.5%. As well. So that certainly is doing okay. 674 for the currency as well. Dave has been talking about just volatility when it comes to the renminbi has basically collapsed in general. Take a look when it comes to earnings. So everything with a sort of consumption AI theme. The casinos like Sands China is going to report here. You got Sense Time, Zijin Gold, Kweichou Moutai. Those are all coming up with results later on today. And Z.AI, this is the big one. So also known as Zhipu, no longer Knowledge Atlas, so they've kind of rebranded. But yes, coming up with this upgrade for its flagship AI model, GL3M 5.3. So what they're talking about is improved coding capabilities. You're able to close the gap when it comes to some of the AI leaders, so the likes of Anthropic, the likes of OpenAI. So they did slide already in Hong Kong, the stock, despite this announcement last week. But yes, certainly one to watch today. Yeah,
we'll get into all the idiosyncratic fronts of the earnings stories with a lot of those companies, of course, in a couple of moments here. But I guess just to get a sense of, we've sort of alluded to the fact that it has been on the quieter side of the news front today, and we were supposed to be talking about, at this point in time, new home prices. That's all been pushed back into the afternoon session. All that is also to say the bond markets have really moved ahead of this and really started to price in a softer macro in China, but also, as Yvonne was just pointing out as well, right, the other part of the K-shaped economy is the AI story, right? So those new models from China Tech, but new loans are on the lighter side. What does that mean for the macro front? Let's bring in Anthony Stevens here with us, our markets reporter, to just paint that picture for us, this juxtaposition of contradiction.
Yeah, so we got some good data over the weekend in terms of how well this push is going, right? So Alibaba is pretty much becoming the backbone of the open weight ecosystem globally, right? Yep. People are building on top of it at the very least. And that was the number was important, is the download. So people are actually not just using the tokens, they're actually downloading these models locally to use them for their own purposes, right? And this has been China's push. That's their kind of technological push to get people to use Chinese models as a backbone of the future of AI. And that may not play out in a very simple way in the stock market, right? So you see Zhipu and Minimax struggling after they've released their models. So because now the bar keeps moving higher, like show us more innovation, show us more efficiency, and these models are in kind of a race to the death. But as a group, they are taking away focus from the US open weight model. So that is China's contribution here. Now, if you put that in context with the broader China macro, when you see the slowdown in new loans, you see the slowdown in consumer demand, you see the slowdown in housing demand. China is a one-trick pony at this point. The pony is very pretty, but it's a one-trick pony. And that means that the earnings season for AI is extremely important with Baba and Baidu and Xiaomi, like you guys mentioned, and you have Minimax in the back end of the month as well. Is all this AI adoption, all this AI dominance, you can almost say, in the open weight space, is it producing any money, right? And Zhipu still remains the top-performing stock in the Hang Seng Composite Index, even after the kind of vertiginous fall it's had recently, right? So it's very important to investors in China. It's the one space that's working. And of course, the hardware space continues to chug on, right? We have SMIC, Huaheng, all these names kind of continuing to dominate the top end of the Chinese equity market onshore as well.
Anthony, thank you. Our Bloomberg Markets reporter, Anthony Stevens there, and what to watch out for in this earnings season. And of course, beyond just the AI and tech space, we have to talk about Zijin Gold as well. After its adjusted net income rose around 180% in the first half. Let's get more from Michelle Leung. She's the head of our Asia Metals, Mining and Sustainability at Bloomberg Intelligence. So gold prices certainly have been interesting, right? When you talk about how they've basically stopped rising, right? How do you think that impacts a company like Zijin Gold in the next few years?
Well, actually, as you mentioned, Zijin Gold did a very good first half. It was rising by 180% and accounts for around 44% of the consensus already. However, while we're still constructive about the gold price coming forward, I think the 51% year-on-year growth in the gold price is unlikely to repeat in the second half. So that's where the volume growth to kick in, and it will become a more important driver for its earnings. The company itself is expecting 26% year-on-year growth in its full-year production, and going forward is still expecting 15 to 27% growth as in production by 2028. So in my view is that this company, the earnings growth could be shifting from the gold price driver to the volume growth story.
There was an investment in Allied Gold. What does it mean for the earnings outlook? How does it change the earnings outlook is my question, I guess.
Right. I think it is a good move for the company instead of acquiring the company at a premium. Now it decides to invest $295 million for 9.2% stake. If in terms of valuation we calculate that, it implies an equity valuation of around 4.5 billion Canadian dollar, which represents around 18% discount to its previous offer and 2% discount to Allied Gold's current valuation. So it's quite a good entry for them to gain the exposure of Alliance growth. However, they do need to give out a very big capital at the upfront. And of course, the valuation right now is more attractive as well.
Yeah, and tell us a little bit more about Zijin Gold International. I mean, they deliver strong earnings, strong production growth. Do you think the stock deserves to trade at a premium to some of the peers globally?
To be honest, this company always trades at a premium to its peers. I think that's also because of their potential growth and also its consistently delivered growth as well. And if you look at its past M&A transactions, it's always done at a very good record in terms of its cost and in terms of its execution as well. And also its unit cost has been coming down as well if we exclude its royalty. Well, royalty increased because of the higher gold price, but if excluding that its unit cost actually come down. So I think the market is paying for that. And in terms of valuation right now, it's trading at 7.2 times EV per EBITDA, which is only slightly higher than the global peers average of 7 times. So it's not too much premium right now. I think it explains the story.
All right, Michelle, fantastic. Thank you so much. Our Bloomberg Intelligence Head of Asia Metals and Mining and Sustainability, Michelle Long. Right, let's have a look at another earnings report coming through on Friday. This is out of Moutai. Shares are down close to 4% on price. That is the biggest drop since April on the stock itself. The headline is it missed estimates. Let's bring in Elaine Lai, our China consumer analyst at Bloomberg Intelligence as well. So did the numbers surprise you? What did the numbers tell you about the health of the consumer?
Well, this is the first time in 12 years that the second quarter net profit fell year on year. So I think the negative surprise here is that it missed both revenue and bottom line. Well, the company had a price hike significantly in March, and that apparently didn't help to offset the likely volume weakness we saw in the quarter.
So why do they raise prices, right, at a time when demand is actually pretty sluggish? Is it just kind of trying to defend market share? What do you think is going on?
Well, like Yvonne, as we have pointed out, typically for a consumer company, if they raise prices, it means it's a response to strong demand, right? But in the case of Moutai, I believe it's the exact opposite. I think the company is trying very hard to support the revenue growth at a time when we are seeing a prolonged baijiu market downturn here. So if you recall last year, the government rolled out a very strict revised guidelines for anti-extravagance, curbing official consumption. They put a blanket ban on all alcohol consumption and gifting at the official events and official meals. So I believe that we are still feeling the impact from that revised guidelines.
Why? Well, it's not like that's a new thing. You know, we've seen these rounds, these bouts of anti-extravagance before. Why does this one seem to be having a more pronounced impact on the company?
Yes, I believe you're talking about back in 2012 when Beijing rolled out a set of anti-extravagance campaign. You saw that the 3 years following 2012, Moutai actually managed to grow revenue, which is pretty spectacular. I don't think we can repeat that sort of a strong performance at this current environment because back then it was able to shift some of the consumption away from the, say, consumption at the state-owned companies and official occasions to private sector. Now, with a very weak retail consumer environment, it's hard to replicate that. Typically, the impact of anti-extravagance campaign would last for 2 to 3 years, and we're still in the middle of it.
What does that mean for the business model for Moutai? I mean, it's long been seen as one of the most, I guess you could say, profitable sort of spirits companies in the world, and really kind of surpassed
the king of margins.
The king of margins, if you compare Diageo and some of these big names out there. Is that exceptional business model still intact, or do you think that moat in some ways is being eroded now?
I believe even in a prolonged downturn, the profitability is still very much intact. There are a few ways to drive that profit margins, even if sales decline. So, like you have pointed out, it has got the highest gross margin in the world of all the liquor companies at 90% consistently. And then the company is also trying to drive more sales toward direct channel that helps to recapture some of the profits previously ceded to the distributor. So that is going to help sustain the profitability. But I believe that beyond the fundamentals, investors might be increasingly looking into emerging governance risk. Like just a few hours before last Friday's result was announced, actually the CCDI, the disciplinary body of China, announced that a former senior executive of Moutai's parent company was investigated. So this is already the 5th case of current or former investigations since early 2025. And also the second rival, Wu Liangye, revised its accounting statements for last year. That led to a massive profit cut. So I think these things all added together will kind of like diminish investor trust in the whole Chinese baijiu sector.
Which is why we need someone like you to really tell us what the nuance is when you look at just the numbers itself. Now, the macro here is we have retail sales coming out later this afternoon. Are you watching anything in particular within the retail sales data that might indicate trends as far as your coverage is concerned?
I believe actually heading into July is widely expected that the sales number will be quite soft. Okay. Even assuming that if July sales number extend the slight positive growth from June, it still doesn't represent a significant recovery in consumer sentiment. I think what's more important to watch would be if there is there any policy comments or stimulus measures coming out from the State Council briefing today.
Okay, we'll look out for all those signs. Elaine, it's great to have you. Elaine Lai there, Bloomberg Intelligence China consumer analyst on Kweichou Moutai. It's not just those, right? We've been talking about it's going to be a big week for China earnings overall, right? As we talk about Alibaba, Baidu, those are the big sort of headliners. But also in the EV automaker space, right? Geely, Xiaomi are set to report. Of course, PopMart, Li-Ning, Hong Kong Exchange, all the fun ones. Dave.
Really a cross-section of consumer interest in the market. So stay tuned for our coverage, of course, of a lot of these big earnings coming through this week. It's also worth pointing out that Alibaba is leading the tech rally we're seeing, this comeback on the Hang Seng Tech Index. Today, a fuller look at the market action on the other side of this break. Plus, we'll get into robots ahead as well. This is the China Show. Right, welcome back. You're watching the China Show. We're 15 minutes into the cash market session here. So this Go Global 3.0 report, a new one out of Goldman Sachs, talks about how China has entered this new export phase when you look at what they're exporting effectively, right? So we've gone from low-end cheap exports to 2.0, which I believe were things like EVs, solar products, batteries, to now industrialization of the AI story and globally pushing that to many markets across the world. Joining us here on set is one of the report's co-authors, Jacqueline Du, is Goldman's head of China Industrial Tech Research, and she's here with us. Talk us through this. So are we at the very beginnings of this, and how has it showed up already in your research?
Yeah, I think China's export strategy has pivoted from Go Global 1.0, which refers to the export of chip manufacturing, to exporting overcapacity, which is the 2.0, which basically refers to industries such as battery, solar, electric vehicles. And now we think we're entering the Go Global 3.0 stage. That basically we define this as AI-enabled, technology-driven industrial capability, or basically the frontier tech. And since you mentioned this report, I think we have very unique analysis in terms of we look at this Go Global 3.0 trend from a product-by-product, market-by-market analysis, working together with Goldman analysts around the globe. And I think this is something you cannot tell from the blended financial reporting.
So tell us a bit more about how, I mean, everyone talks about China dominating in the robotic space, right? How far ahead are they to maybe some of the U.S. names out there, right? If you compare like a Unitree versus Boston Dynamics, for example, like how do you kind of compare the two?
First of all, I would say for most of those product categories, China, of course, is still lagging behind global peers, where we divided the export opportunity into several archetypes.
Okay.
First of all, we call it bottleneck solvers. Those would be the opportunities such as certain power equipment companies that they can deliver the strongest margin uplift in the midterm, mainly by addressing global supply deficit. But the sustainability will highly depend on how long these supply gaps last. And two, we think the technology upgraders, for example, companies can leverage faster R&Ds and to benefit from like 800 VDC architecture shift in AI data centers. They can also achieve margin accretion from new product innovations. But of course, I think for those companies to be the really global leadership companies in the longer run, they still need to improve in many aspects, such as the product quality and most importantly, the ecosystem, the aftermarket service capability. That's actually where the strength of the Western incumbents lie. With that said, we also see certain categories, for example, energy storage system and human robot, we call it established global archetype. And for this human robot, actually, I think it's very interesting. It represents the new generation of Chinese tech companies. They target global companies day one when they start. So that's something different from history, and we call them born global. But of course, for this archetype, other than technological prowess, regulatory scrutiny will also be important. I think for those group of companies, we actually expect them to see midterm pain because they need to navigate geopolitical complexities other than technology innovation.
Yeah, I was going to ask you that, because how do you account for the unknown of politics? Because, you know, this 3.0 is a lot more politically sensitive than one.
National security concerns.
Exactly.
Take the recent U.S. FCC restriction, for example. Yeah. For example, solar inverter, human robots, and also optical transceiver modules. Yeah. Those are exactly the established global and born global type of archetype companies. They face the strongest regulatory scrutiny, and typically it's related to data security. Okay. For example, the grid equipment company will talk about there's a factor in terms of grid security, etc. Typically, for those categories, we would expect stronger regulatory risk as compared to others.
So these four archetypes, the four groups that you mentioned, where is the bulk of the profits here? And profit growth? Could be separate questions.
Exactly. I think investor has to understand the nuances of the profitability outlook of those different archetypes, and it's important for them to identify what's the most actionable and profitable opportunity set.
Otherwise, it's just a long read, right?
Correct, correct. So exactly, we are highlighting bottleneck solvers and technology upgraders. That's the actionable opportunities for investors.
Unitree, I mean, this is the big one this week. Yeah. Retail demand seems to be just on fire. Yeah. What do you think people are buying, this story? What are they buying into?
I think a successful Unitree IPO would be a significant milestone for the industry. First of all, it can provide several implications. First of all, it's a market validation of this nascent human robot industry, and signaling investors' confidence in its long-term potential. And two, it grants Unitree access to substantial capital for accelerated R&D and also scale production, which will be very important to drive mass deployment. And three, I think for the many robotics company out there in the pipeline for IPO, it also sets a benchmark precedent for valuation and also market appetites. However, I think it also brings transparency and market scrutiny especially on profitability and also the path to commercialization.
Jacqueline, it's great to have you. Jacqueline Du there, head of China Industrial Tech Research at Goldman Sachs. Coming up in the next hour, we're speaking to BlueScope Steel's CEO, Tania Archibald, joining us with the company outlook after full-year underlying profit more than doubled, while falling just short of analyst estimates. We have plenty more coming up. This is Bloomberg.
Right, welcome back. So we've actually started to see some really interesting stories prop up across these equity markets here. Let me just mention, of course, the new buy recommendation coming out of Citi. It's playing out across perhaps more the H than the R, the A shares of Luxshare. SMIC was out with earnings, and of course we're still feeling the tailwinds from earnings. We talked about Moutai and Zijin, and of course coming up is SMIC. Which was late last week, extending its gains, coming up on your screens a further 3.3% to the upside. Benchmarks are, the story here is a comeback on MSCI China. A lot of that is a comeback within the platform space, so Alibaba, the like. Hang Seng Tech is leading gains today, 1.5% to the upside. 10-year yield is continuing to see some downside, although we are coming off lows of the day. Lots more ahead. This is The China Show.
Welcome back to The China Show. It's a sunny day in Shanghai. And look at really how the CSI 300 is doing. It's pretty flat right now. We talked about how things are just pretty quiet, really, when it comes to summer. And yeah, I guess summer is over, though, right? You're talking about schools starting, you know.
The academic
summer. Yeah, summer. But it still feels like the way across these markets here, despite the fact that it's a big earnings week as well, right? Baba set to report, Baidu as well. And yes, we're still counting down to economic data. Usually we're supposed to break it right now in the next 15 seconds. But yes, we're waiting till 3 p.m. now. It's been delayed. Yeah,
you'll need to wait 5 hours and 8 more seconds before that comes out, of course, as we go into later today. But I guess it's something for us to talk about tomorrow. And I think when you look at markets, though, showing you the tech story, which is, of course, something we'll get into and something I think we can sink our teeth into today, I think is the point we're making here, despite the fact that you are quite on a benchmark basis. Although I think when you look at the Hang Seng Tech Index, that is, I think, underscores the point we'll get into with our team in a moment. Sense Time, earnings story, and of course going through that is Tencent, Kioxia, of course, that's a Japan story coming through. 5% to the upside. Speaking of Japan, rarely do we get excited over a GDP print, but this one actually missed quite substantially in Japan. Not that it has any bearing on the equity market today, although I think the conversation is, do we get a quicker pace of rate hikes coming through out of Japan? Bond markets are showing you that. Look at how that worked out. 10-year JGB yield highest since 1996. A 20-year bond auction, not as liquid, of course, as the 10 and 30 in the U.S. side, but that's coming up later in the week. And, of course, the other macro read here is the softer dollar, weakest since May on the Bloomberg Dollar Index.
Yep. So certainly that could be helping a little bit of this part of the world, but certainly we're watching all things AI, the innovation that we've seen when it comes to these Chinese models, right? So it wasn't just Z.AI or Zhipu, right? They unveiled this flagship GLM 5.3 model with some upgrades and the like, and people are saying, look, it looks like they are still narrowing the gap when it comes to some of these key rivals like OpenAI and Anthropic. And then you have Alibaba coming on, talking about their AI models have basically hit a milestone, right? 3 billion downloads, which has surpassed in some ways a lot of these global peers as well. Let's bring in our markets reporter, Anthony Stevens. He's back along with Bloomberg Intelligence senior analyst Robert Lee as we talk about really just all the developments we've seen. Anthony, let's start with you on really what caught your eye with some of the headlines here.
Yeah, so let's start with macro and kind of drill down, right? So it's very interesting that Chinese macro is as weak as Japan macro, which is as weak as the US macro outside the AI ecosystem. So we're in a bit of like a Groundhog Day with regards to AI, but investors are not bored about making money ever, right? So that's kind of dragging in even more money into the AI space as the macro conditions around literally everything else becomes more difficult. Now, within that trade, it's becoming very interesting the pressure the Chinese models are putting on everybody else and themselves, right? So you see Zhepu and Minimax actually struggle after the new model results are out in terms of beating those elevated expectations for continual technological progress, right? Now that bar keeps moving higher. People expect the Chinese to catch the Americans and start charging. And if that's not the case, then you see this big share price retracement. So you saw Minimax and Zhepu get whacked on Friday, and Zhepu's again, Z.AI is weak again today, right? So that's a kind of a new dynamic where people are either asking for extraordinary progress on the technology front or signs of progress on the monetization front. And that's where kind of the sense time move can be put into context. It's a marginal player in the AI race, but they're monetizing. So the market is rewarding them today. So that back and forth is interesting on the AI software side. On the hardware side, life is much more simple. They're making money hand over fist from whoever is renting out the compute, whoever is building out the data centers. And the shortages are extending into the most simplest of components, which is driving Taiwan.
Rob, can I bring you in here? So we talked about, and Anthony just went through a very interesting set of numbers, right? Whether that's the downloads on Baba or everything else that we've heard in the last, let's call it 2 hours, and I'm exaggerating there. But why this sudden acceleration in announcements and developments in the Chinese AI space?
That is an excellent question, because for the best part of 12 to 18 months, Chinese models were between 10 and 15%, based on US data in performance terms. And then suddenly over 3 consecutive months, they've narrowed the performance gap significantly. So based on the note we put out this morning, the gap is around 5% currently. So 3 consecutive months of improvement. It's hard to be entirely sure, but there's definitely been a shift up into larger, more complex models, where previously China, with DeepSeek being the flagship leader in the sector, was far more focused on smaller, more computationally efficient. So we've seen this shift up to larger models, which inherently will be more powerful. But also, as I repeatedly say, China's got a very, deep expertise in software. It's home to some of the world's largest software companies like ByteDance, Tencent, Alibaba. Chinese developers are good, and China has an approximate 5 to 4 numerical advantage in terms of the absolute number of professional software developers. So China's really good at software. They were a little bit behind the curve initially because America had the lead, and they've progressively narrowed the gap. And from where we sit at the moment, that will continue.
So do you think China can one day overtake the US? And does it really matter?
Again, that is a very good angle. I think, ultimately they can. It's certainly neck and neck now. But again, it doesn't matter because we live in this bifurcated world. So realistically, Chinese companies are going to make most of their export dollars in emerging markets in the global south. Realistically, are they going to sustainably monetize in Western markets, which are largely dominated by Western models, OpenAI and Anthropic? Then it remains to be seen. And also, just to flag, we saw Secretary Bessent's comments a few weeks ago about, really being concerned about potential IP theft, although individual companies were not named. But Anthropic did name a couple of companies, including Moonshot AI, which it accused of distilling its own models. So we'll have to see how that plays out. There's a lot of geopolitical risk tying into this.
Almost the same question to both of you. Anthony, you touched on this earlier, but if you could talk a little bit more about this. The market seems to be punishing Zhepu today. Does that move make sense to you? And Rob, you don't seem to think that this new model will actually help Zhepu, but let me start with you.
Yeah, so the first part of the Zhepu model thing is it doesn't really move the needle in terms of what it can do on the software side as much as investors had hoped. So they've made it much more about cybersecurity, which is important, fair, right? But that's not what people are paying up for in Zhepu. They're paying up for better coding performance, right? And they have to close that gap with Fable 5, with Cursor and all the rest of it, right? And that gap has not closed materially. In the meantime, you see other Chinese competitors start to close that gap. So like, for example, Moonshot or the DeepSeek new model on the Flash side. So there's this accelerated sense of progress where the bar has now moved higher. You cannot just have a bunch more parameters or a new capability and then the market celebrates. It has to be materially better than the Chinese players you're competing against, right? So that dynamic now becomes much harsher into the back end of the year. Everybody knows the Chinese are good, as Rob said now, right? So who is the best becomes the toughest question, and that's a very tough question for Zhepu as it sits on the absolute top of the stock market performance league in the market.
And on the company itself, you don't think that the company can capitalize specifically on this new model?
That's right, because it lacks the scale and resources that the tech giants like Alibaba, Tencent, Huawei have. At the end of the day, their AI operations in cash terms are loss-making, but they're being subsidized by the cash cow businesses. So, for example, ByteDance generates an enormous amount of advertising revenue. Tencent, again, is a social media giant. So you've got these core businesses which are subsidizing the AI developments. Jupu doesn't have that. So it lacks scale in comparison to these big tech platforms in every respect, in terms of developers, etc. And actually, since it IPO'd in January, consensus has revised up the operating losses for this year by 85%. So things are actually moving in the wrong direction. One last quick point. When we sat down here and talked about Jupu in detail, was on their last major model launch in June. So this was, again, the 5.2 model, made some headlines. If you look at that model now, it's ranked 27th in the global rankings. And as Anthony said, you've got so many model launches almost every other day at the moment, companies continually leapfrogging each other. It's very, very hard for all players, not just Jupu, to gain a sustainable competitive edge in a market when a China context is commoditized. You've got nearly 1,000 large language models competing against each other in China. So we need to see a shakeout, we need to see price rises, and we need to see the advent of AGI, or artificial general intelligence, which at this point still remains a long way off.
Yeah, you were talking a little bit more about Taiwan earlier as well. I mean, you're saying that Hong Kong and Taiwan are starting to look similar, this equity market?
Similar, right? And it speaks to what Rob was saying. It's so hard to pick a LLM winner. It's much easier to pick a hardware winner, right? And especially since all hardware is in shortage, right? So, and that is why Hong Kong and Taiwan are starting to look similar, where the top end of the index in terms of performance is being dominated by companies that are not making very difficult stuff, right? It's Kingboard laminates, or it's Nanya PCB, or Unimicron. This is just basically plastic and wire put together in a very complicated way, but it's a lot easier than doing an LLM. Right? But it's just in shortage. Not enough capacity exists on the planet on this stuff, given the scale of the data center build-outs. And this obviously, is becoming geopolitical as well, with the optical names in focus, for example, between the US and China. So where this capacity comes online becomes a big constraint, and who can build out that capacity quicker, right? And that is where China perhaps has an advantage. They can start to ramp this stuff up a lot quicker than maybe any other major economy can.
Team, fantastic. Thank you so much. That was Robert Lee and, of course, Anthony Stephens for us. Yeah, there we go. Your new winners. I think more than enough visual for you there. Okay, we will take you now to Beijing, where there is a live ceremony taking place as we speak, marking the 100th anniversary of former President Jiang Zemin's birth. And we are just going to leave that there for now. But for Bloomberg clients and subscribers, you can continue watching at Live Go. Lots more ahead. This is Bloomberg.
If you look at the global AI arms race between China and US, it's quite daunting to see which one will slow down. So I think the hyperscaler in the US, they are forced to just keep building out the infrastructure because the demand for compute is still very huge. That's a lot of demand for capital. And that is exactly why I think the cost of capital will go up. You can view this as a fiscal stimulus from AI company. So we're going from a government fiscal stimulus to private sector fiscal stimulus, and it's the same to us. Credit spread will widen from here. Just a matter of supply.
Yeah, a really fantastic sort of interview that we had with Tracy Chen last week from Brandywine, right? She talked about really the effect of really this whole AI investment boom, and really this whole sort of fiscal stimulus is really coming from these private markets now. And certainly that's one thing that really is something that bond markets are dealing with, right? The U.S. Treasury market does face another key test this week when we're talking about $16 billion of 20-year bonds are up for auction on Wednesday. And the recent auctions we saw did see investor demand some of the highest yields in years to hold long-term U.S. debt. Let's bring in our MLI strategist, Mark Cranfield. He joins us with more. But yeah, there's so many things that's sort of leading to the steepening trend, I feel, Mark. It's not just the Fed. It's not just, growth in the U.S., but also when it comes to this booming AI investment sort of story as well. So it's not just a really kind of a Fed that's the bigger threat now, it seems.
There's a tremendous demand on people's money, particularly in the long end of the yield curve. You've got these hyperscalers issuing enormous bond transactions. Sometimes we see them even larger than Treasury auctions. Sometimes it's 30 to 40 billion in one go, enormous amounts of money on a regular basis. And that's competing with the same kind of money that would go into long-term bonds as well. For now, what you're seeing is it's being absorbed, but gradually yields are pushing higher. People are demanding more compensation. Now you've got this situation where investors are losing confidence in G10 governments because their fiscal deficits are increasing and there's no particular sign that they're going to do anything to get that back under control. So you've got term premiums are widening. It's obvious in the Treasury market, but it's also happening in other places as well. JGBs is another place you're seeing that. And then you've got the demand from the hyperscalers to keep on issuing these bonds as well. And you get a situation where something like NVIDIA embeds itself with the whole Wall Street gang by doing this $500 billion funding issue, which draws in everybody, all the big players in Wall Street as well. It's putting NVIDIA and AI in a situation where they're becoming too big to fail. The US government has to take notice, and investors are beginning to see there's a potential backstop behind it. But then there's negative feedback loop back into treasuries because the US will need to issue more. It's an endless cycle at the moment, and when you've got inflation being sticky as well, core in the US is still at 2.45%, which is still way above where it needs to be, and no particular sign is coming down. It is eventually going to end in a big crunch where somebody says, we just aren't going to pay these spreads for bonds anymore. We demand even more compensation than what we're currently getting in the market. We're creeping towards that point. Very difficult to say whether it's going to be in a few weeks or a few months or maybe even a couple of years. But clearly we're stretching the band here further and further and further until we get some breaking point further down the road, and it will show up in the credit space.
If not already, and I think the fact that you have the likes of an NVIDIA, just to use the company as an example, Mark, and together with their circle of financiers coming out and saying we need to raise this amount of money, and here's the thing. So how does that? So you mentioned Japan. I just want to ask you about that because what's happening in Japan also has the effects of the capex cycle that's playing out in that specific market. So who do I blame for rising JGB yields? Is that this GDP print that's coming out? Is it the BOJ that's about to hike interest rates more than what we expect? Or do I point to NVIDIA that's also perhaps inflating credit spreads across the world?
To some extent, it's all of the above. But if you look at the breakdown of the GDP data today, you had a headline which came in slightly below expectations. You would think, simply based on that, it doesn't give the Bank of Japan much impetus to raise rates. But the GDP deflator was even higher. It's higher than the headline GDP number. So that's dangerous for the bond market. You've got clearly sticky inflation in Japan running above the level where short-term yields are, and the long end of the market has to compensate. You're seeing, as you got on the screen there, you've got yields up across the board. We've got a 5-year and a 20-year auction for JGBs this week. Neither are going to be easy. The 20-year in particular is an unloved sector. It falls in between intermediate and super longs. Nobody particularly likes it. And you have a US Treasury 20-year auction less than 24 hours before it. It couldn't be a worse setup in the JGB space this week. So they're going to drive yields higher, most likely, to get the compensation in place, to try and make those auctions look cheap enough so that they go through smoothly by the end. But it's a dangerous game, especially when in the background you have a story like we're running today. We referenced the Wall Street Journal story saying that Iran is forming a plan to go harder against the United States in the Middle East. That's not going to help oil prices. They're going to stay higher for longer. It's a vicious cycle at the moment, and there's no easy way out of this until someone gets inflation under control.
Does it make China look like a more interesting story? I'm looking at the CGB rally, right? And you have the 10-year yield around the lowest in over a year right now, given that this is an economy that is struggling with a lack of deflation.
there are certainly positives. If you look at China, the currency is very stable and relatively strong, performed tremendously well this year against everybody. Yuan's a very good currency. But what do long-term Chinese bond yields reflect? They reflect, to some extent, a falling confidence in the strength of the Chinese economy. They're telling the leaders in China that the economy is not robust enough, that they need another rate cut to keep things going. That's not a great signal in itself. I mean, it's good in the sense that it saves value, restores a haven appeal for Chinese bonds, but possibly not for reasons that are really the most appealing to global investors. On the flip side, you've got an equity market that can't seem to make up his mind, apart from some of the specific sectors that the guys were talking about at the beginning of the show. Clearly, there are some Chinese tech stories which are very good. But you've got a very mixed picture here. It's not proving itself to be an all-out haven for the rest of the world. And then you've got the restrictions on getting money in and out of China to some degree, which puts people off. So yes, it's a good story for some people, but it's not a global story that all investors can jump on.
I mean, certainly, if you look at it from a fiscal discipline perspective, which obviously cuts both ways on the cyclical side. Mark, thank you so much for that. Mark Cranfield in Singapore for us. We'll have more on the China story coming up next. Plus, of course, we'll be speaking with the BlueScope Steel CEO, and there might be, of course, a China angle to the steel story, I imagine. Lots more ahead. This is The China Show. Right, just a preview of the upcoming numbers. Economic data should be out usually at this point in the day, but of course the release has been pushed back to the afternoon. On your screens right now are the numbers to expect. Left side of the screens is, of course, the what's taking place separately in Beijing. Let's bring in Min Min Lo, our China correspondent here too. Why don't we start with the data and the preview here?
Yeah, the data is not expected to be very good, right? If you look at the forecast, retail sales is the only bright spot, improving sequentially. It's expected to come in at 1.5%, but still that is very low levels compared to, well, pre-pandemic levels. This is the lowest since, I guess, the COVID years. But everything else, whether it's property investments, industrial production, fixed asset investment, jobless rate, all expected to deteriorate. And it really shows you that the K-shaped recovery is still in focus here, right, with that tech-led recovery. And it doesn't help that this focus on tech and automation also means that less jobs will be created, right? According to one economist, the jobs created by the new tech sector is going to be just about half of what traditional sectors like home appliances, garments, and property would be able to create. So that will continue to be a drag on job creation, on wages, and it doesn't necessarily address some of the underlying deflationary pressures as well.
And really delaying this release of the activity data, that's something that we don't quite see, right? It's a break from recent practice. Tell us a bit more about this ceremony that's going on, marking this anniversary of Jiang Zemin.
Yeah, it's not unusual because usually when these big leaders, on their 100th year birth anniversary, we do see these celebrations to mark the occasion. So for Mao Zedong, for Deng Xiaoping, we saw that. So Jiang Zemin, being a third generation leader, also has the celebration as well. But I would say compared to previous generation of leaders, it is quite low profile because the celebration for Deng Xiaoping was a month-long event that culminated in this Great Hall of the People ceremony. But here for Jiang Zemin, it's quite low profile. The government has pushed out some Jiang Zemin-themed coins, and there has been documentaries being screened, and of course President Xi is speaking now as well. And I was listening earlier to some of the remarks. Quite remarkable that we heard President Xi refer to the Tiananmen Square incident. Really rare. He didn't name it specifically. I think he mentioned something along the lines of a significant political event in 1989 and credited Jiang Zemin for bringing stability and order back to the country. We know that was one of the key reasons for his ascension to the top job back in 2003, I think. And of course, on the party, Communist Party mouthpiece, People's Daily, there's an editorial as well that really highlighted all the achievements of Jiang Zemin and also using that as a way to rally the people around the party, right? There's a quote talking about how it's important to have the party at the center. And so this is really a way to use the party elder and the respect for him to try to galvanize the party around President Xi as well.
Min, thank you so much. Min Lo, our China correspondent. Therefore, Bloomberg clients, again, you can continue watching what's going on in Beijing through Live Go on your Bloomberg terminals. Right, equity markets, we'll just leave you with a look at how we're doing across the region on aggregate. It's worth pointing out you don't have Korea and no Indonesia as well trading today, so volumes are understandably on the lighter side of things. We're about a quarter lighter for this time of the session. We are up slightly on price. We are headed into the Japanese lunch break. We have plenty more ahead. This is the China Show.
11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a minute or so. And there you go. We're pretty flat when it comes to the Nikkei here this morning. Some pressure when it comes to the topics. But there continues to be that pressure in the JGB market, right? We're 4 basis points up higher in that 10-year JGB yield. We're getting so close to 3% now. So that is near, if not at, those 1996 highs for the 10-year.
30 years ago, right?
Yeah. Where were you in 1996?
What was I doing? I actually think we have a stock picture of that you guys rounded up without my...
You had much longer hair.
Without my knowledge, yes. But yes, I was doing... What were you doing in 1996?
Oh,
okay.
Can't remember.
What
was that? That wasn't that many years ago, right? Yeah. You know, 1996?
30 years ago. Is it? Okay, it's my math. You know, it's so quiet on the news front today. I don't think at least my synapses are firing on all cylinders here. Guess what? We're back to 159 right now on dollar yen. I just noticed that as well. Back below 159 right now. So after we were pushing towards the higher end of that. But still, I think we're halfway back between the intervention point and the low end of dollar yen.
Yeah.
We have crept back. We're flat on the Nikkei 225. But
you mentioned 1996. I just remembered.
What?
No, so this weekend I went to a Canto Pop Mania. I finally got on the bandwagon and went to one of those parties that all they do is play nostalgic Canto Pop from 70s, 80s, 90s, maybe early 2000s. Great time. Anyways, just aged myself a lot. Markets are doing this here right
It was a good time for music and culture
and
film.
And they made it into like a whole, dance party, even like the ballads, it was fun. I was probably one of the youngest ones there, though, I have to say. I dragged down the average a little bit, but it was fun.
Okay, yeah, there we go. Bringing down the median, as they say.
I'm glad I can still do that, Okay, talking when it comes to BlueScope. Earnings came out. Certainly, it's quite interesting what we saw, right? When it came to doubling their profits when it comes to the North American operations. You talk about this final dividend that they were able to boost, so some bumper payouts for investors out there. So it looks like quite a bit of a sharp turnaround for the company, and really a lot of questions to ask the CEO.
Absolutely. Fortunately, the CEO, in fact, joins us right now. Tania Archibald here, MD and CEO of BlueScope Steel. Tania, good morning to you. Thank you for joining us on the program. We appreciate you carving out part of your time. We know it's been busy with the earnings release today. I mean, just to ask, I think it was a fantastic period for you guys financially. What would you attribute the drivers, and does that continue in your view, Tania?
Yeah, it's a good question, and thank you for having me today. I think in terms of the drivers, clearly the strong trade and macro environment in the US has really contributed to the results. It's not just around the tariffs. I think we've got reasonably robust demand in the US. I think the US more broadly is probably no better place to make and sell steel. What we have is a very good structure around the industry. It's dominated by electric arc furnaces, so very good supply side discipline. And of course, what we have is one of the highest performing assets in North America with the North Star asset. More broadly, the business in North America has performed very well. We've also had very good performance out of the BlueScope Buildings business, which participates more in the downstream industrial commercial space, and we're seeing the beginnings of the turnaround in the coated products business. So again, I think it was a good performance more broadly out of the US business. I think what's particularly impressed me with this last year has been the performance out of our Asian business. Our Southeast Asian business has just had record financial performance. Now, we've been operating in Asia for almost 6 decades, and to see the rewards of the efforts that have been going on for an extended period of time, it's very much very similar to the model that we have in Australia in terms of our value-add coated and painted products, but great to see the performance there with the Southeast Asian business in particular. And then, of course, in Australia, what we have is an incredibly resilient performance. Of course, the Australian business has got reasonable demand, but what it's been dealing with is those very low regional spreads, regional prices, which are really being pressured by that record level of exporting that's been coming out of China. But the Australian business has done a great job on cost and productivity. It's been growing the value-add component part of the portfolio, so we've seen record dispatches of Colorbond and Truecore. And what that says to me is that we've got a business which has tremendous leverage to the upside.
I see. Okay, so I mean, we've opened up several doors there. Can I just maybe ask? Let's focus in on North America, which obviously is a very big market for you guys. And fair to say that the company is on sort of the winning side of the tariff conversation. Not that, of course, that is something we should thank for. But I want to ask about energy costs and how you're dealing with that specifically in North America, Tania.
Yeah, energy costs is, of course, something that we're looking at very, very carefully. And this is actually a challenge right across the entire group. But, of course, energy costs in North America, because we've got the benefit of the data centres, and we can see strength in data centre demand, but we're also very wary of the impact that data centres can have on the broader energy supply question. We're spending a lot of time around our contracting, making sure that we're very, very secure. We spend a lot of time looking at internal generation and also how we can optimise our consumption of energy and being quite clever in how we consume our energy. Of course, being an electric arc furnace in particular, it gives us a lot of flexibility from an operational perspective. But again, energy costs is something that we're very, very watchful of.
It's quite interesting, too. You faced this sort of takeover attempt not too long ago from Steel Dynamics, from SGH. Is that deal, can you confirm now, Tania, that it's dead in the water?
Well, we've had no engagement with the consortium for an extended period of time. We rejected the last proposal very clearly based on the fact that it simply did not represent fair value for BlueScope's shareholders. And we published the pathway for engagement onto the ASX back in February. Now, we have no control over that process. As far as we're concerned, we've gotten on with it. We've been very focused on delivering from the great set of assets that we have across North America, Asia and Australia and New Zealand. We're continuing to grow the assets. I think the results that we've announced today speak to the strength of the portfolio. So the $1.3 billion in underlying EBIT, over $800 million in net profit after tax. But most importantly, we are through peak capex. We've been undertaking a major capital investment program for quite a number of years now. We've passed through peak capex. We're starting to bring a number of important projects. They've come out of construction. They're into production ramp up this half. And what that means is that we've got the benefit of improved cash flows, and we're now looking to step up returns to shareholders. So just to put it in context, this calendar year, with the announcements that we've made today, we've stepped up returns to shareholders to $3 a share. By contrast, in last calendar year, that was 63 cents for the calendar year, and we're planning to repeat the $3 a share for next calendar year. So I think the reality is that we've gotten on with it. I think part of what we're doing in terms of the quality of the assets and the growth that we're currently delivering, I think that's now partially being reflected in the share price. We can't control anything that others may do, and we're simply focused on our assets and delivering the growth and ramping up returns to shareholders.
Tania, that's quite something. The fact that you're confident enough to commit the return to shareholders in the next calendar year. I mean, just to ask then, clearly the business is doing well. You're firing on all cylinders looking at financials. Is there upside risk to that? I'm just asking, perhaps on behalf of shareholders who might be now wondering, what lies ahead as far as returns are concerned. Is there upside risk there to your returns next year?
Oh yeah, there's a very clear intent to lift up returns to shareholders over an extended period. Now, obviously, we can only we're only looking out with the what we've announced today for next calendar year. But when I think about the way in which we operate, the quality of the assets, again, that we have across North America, across Asia, across Australia, tremendous leverage in particular to the upside. In terms of our capital needs, we've also set aside, we have provision for ongoing growth within our capital structure. We don't think that we'll need to make the level of investments that we've been making for the last 5 or 6 years. We've got a number of capital light options. We are continuing to expand the North Star business. We've got a number of capital light options in Asia, as we do in Australia. So we believe that what we're looking at here is, as we ramp down that major capital expenditure phase that we've been in for a number of years, we're looking to ramp up. We certainly won't be holding them on the balance sheet for a rainy day. We've always had a clear principle around retaining a resilient, strong balance sheet, so there's plenty of capacity there.
Would that then mean, M&A, and as far as your growth story, future growth story is concerned, is maybe not one of your priorities, and you're focused on commissioning, asset light, organic growth?
Very much focused on organic growth. Again, we've got a good pipeline of opportunities. We believe there's a lot of optionality within the existing asset base within our core markets. We're very, very much focused on growing our core assets and building on our existing strengths.
From a macro perspective, Tania, I have to ask you about China. It seems like this glut continues. What has this done to the market in our region, you think, and how are you managing that?
So I think I didn't actually hear you very well, but I think you were talking about the glut coming out of China. The reality is that we can't control that. What we can control is cost and productivity in our value-add products. And again, we put a huge amount of effort into that. The model that we run is basically a high-quality, differentiated product, but we also spend a lot of time working through the channel, building out an ecosystem around the channel, looking at all the stakeholders. So we spend a lot of time and effort in building out our domestic position. So we run very much what we call an in-country, for-country value proposition. That's what we can control, and that's what we're focused on.
Tania, Southeast Asia, that was quite a big return story for you guys. I guess a simple way of asking what happened and what's the outlook for that part of the business?
Oh, I think there's a lot of upside. As much as North America is our primary growth engine, I see long-term opportunity sitting across Southeast Asia in particular. It's an area that we've been very much focused on growing the value-add part of the portfolio. We don't just have our flagship brands there of Colorbond and Zinc. We've got a variety of local brands. We've spent a lot of time building out the channels to market through what we call the project channel, but also the retail channel, which is more looking at SMEs and how we influence through those channels. I would actually say that the demand environment in Asia has actually been quite subdued. And so what we have across all of the 4 major locations, what we have is actually outstanding performance in the face of a pretty intense competition and a relatively subdued demand environment. We've got some spare capacity that's sitting there, so we've got the opportunity to unlock that capacity with a relatively low level of capex. And as we continue to grow those businesses, and they will grow, because what we have at the end of the day is those 4 countries, Indonesia, Malaysia, Thailand, Vietnam, relatively low levels of steel consumption still. What we sell is a premium branded product, quality product, and what we see is as these markets mature, they're increasingly attuned to a higher quality product, and that's absolutely our sweet spot. So I would say longer term growth is the objective for the Asian business.
What about when it comes to steel dumping, Tania? Do you think that's still an issue in parts of Southeast Asia as well as where you are in Australia?
I think whilst you're dealing with global oversupply of the scale that we currently have, it's absolutely an issue. And when you step back, it's I think one of the primary reasons as to what's occurred in the US with the giant tariff wall that's gone up. We've seen Europe go to safeguard measures. We've seen any number of countries have put up tariffs and trade measures because of the extreme amount of dumping that's been going on, these record levels of exports that are coming out of China, causing dislocations across the region. There's been a lot of work done in Australia to really make sure that we have a resilient trade remedies regime. It's all part of the toolkit. At the end of the day, you can't simply rely, though, on a trade remedies regime. You've got to have a good quality product and a good cost base, and that's what we have.
Tania, thank you so much. Regards to the team for us, please. MD and CEO of BlueScope Steel, Tania, Archibald, joining us out of Melbourne today. There's more ahead, of course, into Aussie earnings story coming through across programming here. Tomorrow, of course, we speak with the BHP boss, Brandon Craig, here about the timing and the outlook of many of their endeavors moving forward. The interview is happening on Insight with Haslina Amin at those times on your screens tomorrow. This is The China Show. Always an eye on oil these days. An update, of course, of what's going on in the Middle East. Lebanon had its deadliest day of Israeli attacks in months. Now, this escalation heaps pressure on stalled negotiations between the U.S. and Iran, while Washington prepares fresh sanctions against Tehran. Jill Deesis is with us here, our news desk editor, to get us up to speed here on. Why don't we start with Lebanon and Israel here?
Yeah, so what we saw here were the Israeli Defense Forces attacking. This is some Hezbollah troops. They're saying that this was in retaliation for some earlier strikes that happened over the weekend. A total of 11 people died in these latest IDF strikes. I think what's really important to keep in mind when we're looking at, the sort of proxy Iran war fighting that's happening in Lebanon is this idea that, we're reaching at this point the end of that 60-day deadline that the U.S. and Iran had to sort of negotiate for some kind of longer-lasting peace talks that's happening today, or the end of that negotiation period is today, and we don't really have any kind of progress whatsoever in terms of what some kind of a lasting truce ultimately looks like. It does feel like things have really stalled. I will also bring up the idea that the U.S. has changed tactics sometime within the last week or so. They're talking about further economic pressure on Iran, although at this point it's not entirely clear what that may look like.
Yeah, I mean, they've gone through sanctions before. I mean, Iran has weathered through them for decades, right? What could they possibly bring on the table, economically, to add more pressure?
I think one thing you could consider, Yvonne, is the idea of secondary sanctions. So sanctions that are targeting some of Iran's trading partners, including China. Not particularly certain that the U.S. would necessarily want to do something like that, though, given sort of the importance of keeping up some U.S.-China relations. Remember, we also have this upcoming Trump-Xi summit in D.C. that's expected next month. But again, we're kind of at the end of those types of things that could ultimately, the U.S. could ultimately take effect here.
This morning, Donald Trump said he's reducing presence with these drills with South Korea, citing they've not been as helpful with Iran. What do we know about that? What's the nuance there?
Yeah, that was an interesting announcement this morning. So the U.S. and South Korea were set to begin military drills today. They've actually gone ahead and continued with those. Seems like it was too late to pull the plug in this instance. But you did have Trump come out with this Truth Social post saying that, kind of implying that there was some frustration that South Korea has not been helpful to the U.S. in its war with Iran. Of course, not the only U.S. ally that has not stepped up in the way that Trump has necessarily wanted here, but does kind of suggest here that there's some kind of an underlying frustration that the U.S. president has as he tries to continue to come up with potential options for how he may continue to put pressure on Iran.
Okay, Jill. Thank you so much, Jill Deesis, there, our news desk managing editor. Let's talk about monetary policy now. So the Sri Lanka Central Bank governor says inflation will slow back towards target in the second half of this and early next year. Nanandal Wiramasinga told us earlier on that the situation is stabilizing due to measures aimed at curtailing imports.
Sri Lanka is exposed to this, especially because we are net energy importing country. We only have renewable energy like hydro, wind and solar. So that's dependent on thermal power is high and for transport. And so as a result, we are seeing inflation was running around 2% somewhere until March, April. And all of a sudden, with the government policy of cost recovery pricing, domestic pricing, inflation shot up from 2% to 5% and now close to 7%, which is the upper band of our central bank target limit. So it clearly says energy is an important component. Energy and transport has a very high weight in the consumer basket. As a result, always is vulnerable and basically exposed to high energy and transport prices.
Well, you have earlier declared that the accommodative policy is over. What kind of oil price do you need to see to give you some confidence that inflation is coming under control?
What we have predicted is that our baseline scenario is that if oil prices remaining around $80 a barrel for this end of towards this year and next, then we can manage the situation. So if there are any surprises, then obviously we have a challenge. So what we see, current projection of around 80% now is moving around that level. And if it remains that level, I think we can manage inflation. We are expecting inflation to come down around our target level of 5% in, say, towards the end of this year and early next year.
Do you think that's an optimistic view? Because we had June 6.8%, July was 7.3%, 5%-ish is the target. Yeah. Do you think policy is restrictive enough at this point?
Yeah, because when you look at our tightening in May, it's very proactive and sharp, and it was a market surprise by the market by 100 basis points. We did that because we saw inflation was coming up, moving around 7% for a couple of months this year, especially towards the end of this year. So that was a proactive measure for us to contain. One is the anchor inflation expectation. Second, to slow down the credit growth is so expanding rapidly, and also to have any undue pass-through through persistent inflation from current high levels as a result of oil prices. So for that, all these things are tightening, in our view, was very proactive and good enough measure. That's why last time we did not revise the interest rate in the last cycle. But we are very closely monitoring the situation. We have predictions says it's gone down 5%, so that I think we think we have sufficient tightening. We also see, as a result, credit growth is now slowing down, and also currency is now fairly stable and gradually appreciating from the pressure we had in April and May.
And that was, of course, Paul and Heidi with the Sri Lankan Central Bank governor earlier on the Asia trade. You can rewatch that specific interview on our video hub, of course, or others that you might have missed. You can simply scroll back and just go through, of course, this whole gamut of fantastic and quality content there. You can find that on Bloomberg.com/videos. Right, welcome back. Before we go, just to look at earnings reaction with the sands of time as golden as a glass of the good stuff, going the opposite way of Moutai. Speaking of earnings coming through this week, and of course just today, just to mention, Geely is coming out, just to have a look at that, and towards the back end of that week is Alibaba and also Baidu. Now, on the back of this, just to mention too that later today in the afternoon is the release of the July activity numbers. The prior reads on the right side, the estimates in yellow. Stay tuned for that release. We'll talk more about this, of course, on the show tomorrow. That's it from us here on the China Show today.
Yeah, Insight is up next. Stay with us. This is Bloomberg.